If you are not willing to risk the usual, you will have to settle for the ordinary. So go ahead, take that risk. Life is too short to be scared and take no risks.
Abundance Stock Advisors. Let's make money.
Hello friends, welcome to Abundance Stock Advisors. So if you are a serious stock market investor, think of joining a YouTube channel. Friends, it's a game changer in the stock market advisory industry. And the join button is just next to the subscribe button. And to know the benefits of joining a channel, watch our channel joining video, which is coming up here at the top. And the link can also be found in the video description below. Friends, you can download 36 life-changing training ebooks related to overall finance and abundance absolutely free from our website. These books will ensure success in the three most important pillars of your life, and that is wealth, health, and relationships. The book titles and the download link can be found in the video description below. So friends, in this video, we are going to talk about a very hot investment topic, and that is, which is a better asset class to invest? It's gold or stocks? Now, gold has been rising lately, and the gold price has touched around 39,000. And everybody is talking about investing in gold all of a sudden. And people are saying that it will cross 1 lakh rupees per 10 grams very soon. Is it really true? So in this topic, we will prove statistically why a particular asset class, gold or stocks, is better for investment. And at the end of the video, you will be crystal clear in your mind where you should actually be investing, gold or stocks. So let's get going. Now, generally, one invests in stock markets to get good returns on his investment. An investor hopes that the price of the stocks bought today will rise in the coming months or years. Obvious. Now, future plans of family security, education, and marriage of the next generation, and also retirement economics are made based on this hope. However, in the past, it has been observed that people are too afraid of investing in stock markets, and they generally invest much less money than what they can actually invest comfortably. And one major reason for that is many investors in India, they do not have the necessary knowledge of investing in stocks. It somehow appears very difficult and complex to them. So they find it risky without any real reasons. And on the other hand, they see gold as a much safer asset class, and they have a belief that in future, gold will only continue to rise. And even when the prices of gold, they come down, they take it as a small correction, and they believe that it would recover very soon. And also, investing in gold, it requires no special knowledge or education. And friends, interestingly, this idea of gold being a safe haven is believed almost everywhere in the world. Therefore, whenever the stock markets fall, retail investors, they rush to pull out money from stocks and invest in gold. And most of the times it's just a knee-jerk reaction. But sometimes it continues for a few weeks. When the retail investors, they feel assured about stocks again, they sell gold and buy equities once again. So going by this popular logic, gold should always fall when the stock market rises. And the stock market should always fall when gold rises. Is this true? Let's do a reality check. Let's see some statistics of gold and stock markets in the last 20 years. So friends, look at this chart. It highlights a 4-year period between 2003 and 2007 when gold and Nifty were rising simultaneously. Gold in blue and Nifty being shown as a red line. So the period between 2003 to 2007 was a huge bullish period for both gold and stock markets, and they both appreciated considerably. So friends, our popular logic that when gold rises, the stock market falls is proved wrong here. Now, our investor friend Mr. Rahul somehow managed to buy gold at the very bottom in 1999 at $252. And then he managed to sell it at a peak price seen in 2007-8, that is $1,032. So it means he got 3 times returns in approximately 8 years. Now let's say Mr. Rahul managed the same miracle in stock markets too. That means he bought Nifty in 2001 at a low of 850 and sold it at the 2008 high of 6357. So in this case, his returns stand at about 6.5 times, more than double when compared to the 3 times of gold. And the time taken is approximately 7 years, which means a year less than gold. So, stock markets comfortably beat gold here. We prove that stock market returns are much better than gold at this point in time. And this also goes against a popular belief of gold being much more stable or safer than stock markets. Now, this graph highlights the year 2008. Friends, it was the year of the global financial meltdown and nothing survived this massacre. All the asset classes, they took a beating. In 2008, gold corrected by 34% compared to 64.5% seen in Nifty. Did gold beat the stock markets here? Well, it corrected lesser than the stocks, but it still corrected, right? It didn't fetch more money to investors, right? So friends, if you ask us, neither gold nor stock markets, they actually win here. Okay, now let's see what happened in the next few years. So gold sprinted from the 2008 low of $681 to hit a high of $1921 by 2011, which translates into a return of 182% in just 3 years. Wow, quite impressive. On the other hand, Nifty also recovered all its losses made in 2008 by 2010. And interestingly, the return for Nifty came to 181.4%. It's almost the same as gold. But with the appreciation taking almost 9 to 10 months less compared to gold. So friends, here we can conclude that the stock market outperformed gold once again. Friends, now let's bring back Mr. Rahul, who firmly believes that gold is a far better investment than stocks. And he is still holding gold bought at the multi-year low of $681 made in 2008. Because that's the people treat gold, right? They never sell it because they believe it would always go on moving up and it actually has no depth. So let's see what has happened to his portfolio in the last 10 years. Now, as we have seen earlier, he would have seen the maximum returns of 182% in 2011. But had he not sold it, then he would have been seriously hurt. because after making a multi-year top at $1921 in 2011, it lost about 45% in 2015. It has been consolidating in the band of $1,100 to $1,400 for the last 5 years with no serious chances of any appreciation. By November 2018, at the peak price of $1,200, the return for Mr. Rahul stands at a mere 76% in the last 10 years. On the other hand, in the same period between 2008 to 2018, Nifty has risen by 422%. Mr. Rahul's returns in the last 10 years, had he invested in stocks, would have been approximately 6 times more than gold. So friends, we can conclude by the price history in the last 20 years, starting from 1999, that the stock market outperforms gold by a huge margin despite all the perceived risks. So friends, if you've been thinking about gold as a better investment, then you will have to change your views about it. Actually, a common investor, he fails to understand something very important about gold, and that is gold moves in cycles, and its bear cycles are much longer, whereas the bear cycles in stock markets are much shorter. And in the last 100 years, gold suffered from 2 major bear cycles, and both of which went on for more than 20 years. Check this chart for the last bear market of gold between 1980 to 2004. Friends, gold was pretty flat and it was just consolidating for 25 odd years. And whenever gold is in a bear market like this one, the chances of it rising, even if the stock market is falling, are very low. And in all probabilities, gold is currently in a bear market today. That is what we think. And it has been already consolidating since 2013, just like the bear market of 1980 to 2004. And we're not sure when the bull market will start again. And we personally feel we should not be investing in gold till the time we are sure of its next bull rally. So to conclude, it is better to invest in the stock markets than in gold at this point in time. Friends, while the short-term fluctuations in the stock market, it can actually make you nervous, in the long run, you may benefit more from stock market investments. And yes, if you really invest in stocks which have a good potential, trust us, gold can not even come closer to the returns which actually stocks can give. Friends, we have done a comparison of gold with Nifty index just for the sake of simplicity. And we have not spoken about any individual stocks yet. Friends, we are not ruling out gold because we deal into stocks. But let's look at the performance of these few stocks. MRF, 50 times in 9 years. Your 1 lakh would have become 50 lakhs in just 9 years. Eicher Motors, 182 times in 8 years. Your 1 lakh rupees would have become 1 crore 82 lakhs in just 8 years. HEG, your 1 lakh would have become 32 lakhs in just 2 years. Indiabulls Ventures, your 1 lakh would have become 41 lakhs in just 2 years. Friends, there are many more of such examples. And trust us, the returns of gold, it doesn't even come anywhere closer to this. Can gold even give such returns? Never. Friends, gold can be used for diversification, for liquidity, but never at the cost of stocks. And friends, it all finally drills down to the right stock selection. So before abundant stock advisors recommend a stock to their clients, we study and research a lot of parameters about the stock, both technically and fundamentally. Friends, you will have to do this. There is no escape. Otherwise, your returns from the markets would always stay a dream. It would never come into reality. So you need to be an expert at stock selection. Your experience, your judgment, your timing of studying the stocks, the overall health of the economy and the corresponding sectors, etc., etc. And in fact, even the current market situation, they all play a very key role. So always study the stock in totality and then you should go for it. You have everything to win and make huge money in the stock markets. Some motivation. If you are not willing to risk the usual, you will have to settle for the ordinary. Friends, every stage of your life demands a new you. If you keep doing what you've always did, you will keep getting what you've always got. So risk losing the sight of the shore. Otherwise, you will never be able to discover any new territories. So go ahead, take that risk. Life is too short to be scared and take no risks. Friends, just to remind you again, there are those 36 life-changing training ebooks waiting to be downloaded absolutely free from our website. The book titles and the download link can be found in the video description below. For many such amazing videos, please subscribe to our channel and hit that bell icon. If this video has added value in your life, please like and share. If you have any questions, let us know in the comment section and we will surely reply. Until then, thank you and Jai Hind.